October 2025, China holds 688.7 billion in United States Treasury securities. Go back 12 years to November 2013. That number was 1.316 trillion. The gap, over 627 billion of American debt that China has quietly sold off. And here's what makes this interesting. During this exact same period, China's official gold reserves climbed from roughly 1,054 tons to 2,233 tons, and they become the world's dominant silver buyer, consuming massive quantities through their solar panel industry alone. Now, you might be thinking, okay, portfolio rebalancing, standard central bank stuff. Except this isn't standard. This is a pattern that's played out through every major currency collapse in recorded history. And once you see it, you can't unsee it. Here's what's at stake. The global financial system runs on $36 trillion of U.S. federal debt. In 2024, just the interest payments hit $1 trillion. Think about that for a second. Interest alone now costs more than the entire defense budget for the first time in American history. Foreign central banks are sitting on $8.5 trillion in U.S. treasuries as of December 2024. The dollar backs $73 trillion in derivatives. Oil, grain, medicine, microchips, everything settles in dollars. This isn't just big. This is the entire architecture of how the world trades. And the second largest holder of this debt after Japan has been selling for over a decade straight while buying gold and silver, the two oldest forms of money humans have ever known. What does China know that most people don't? They've seen this movie before, not just in their own 5,000-year history, but in the history of every empire that thought it was different, that its debt was special, that its currency would last forever. China isn't betting against America. China is betting on the pattern, and the pattern has a perfect track record. Let me walk you through how this works. There are 4 stages to this cycle. You'll see them in every currency collapse across history. Once you understand the structure, you'll recognize it everywhere. You'll see it in ancient Rome. You'll see it in revolutionary France. You'll see it playing out right now. Stage 1. The foundation. A nation comes out of war, chaos, or crisis with a currency that's backed by something real. Could be gold, could be silver, could be land, productive power, or just pure credibility from being the last one standing. That backing creates trust. Trust creates demand. Demand turns your currency into the reserve currency. Everyone wants to hold it because it represents something solid. Look at the British pound. It was backed by the world's largest navy, the biggest empire in history, and the Bank of England's gold vaults. Or take the US dollar after Bretton Woods in 1944. It wasn't just backed by America's industrial might. It was directly convertible to gold. $35 per ounce, locked in by treaty. Foreign governments held dollars because dollars were literally as good as gold. Studies could walk into Fort Knox with dollars and walk out with bars of gold. That's not a promise. That's a contract written in metal. Stage 1 sets the anchor. Everyone believes in the backing. Trade explodes. The world reorganizes itself around your currency. And you, as the issuing nation, get what they call exorbitant privilege, which is a fancy way of saying you can print money that everyone else has to accept. They need it for trade. You need it for spending. And as long as the backing holds, the system works beautifully. It's a deal that benefits everyone. The reserve currency nation gets to spend beyond its means. The world gets a stable medium for international commerce. Everybody's happy. But here's the problem. Stage 1 contains the seeds of its own destruction because it leads directly to Stage 2. Expansion and debasement. The country issuing their reserve currency figures something out. They can print more money than they have backing for. At first, just a little bit to fund a war, build some infrastructure, keep voters happy with social programs. The money flows out faster than the gold or silver or whatever is backing it can keep up. Under Bretton Woods, the US started running persistent deficits in the 1960s. Dollars flooded Europe and Japan to pay for Vietnam, for the Great Society programs, for the massive Cold War military machines spanning the entire planet. By 1971, the United States had printed far more dollars than it could ever redeem in gold, at $35 an ounce. The backing ratio collapsed. But the spending, it didn't stop. It accelerated. And here's why this matters. In stage 2, the pain of stopping is worse than the pain of continuing. Stopping means recession, unemployment, political chaos, the collapse of the very programs that bought you social peace. Continuing means inflation. Yes, but inflation you can export to everyone holding your currency. The reserve currency nation chooses to continue every single time. It's not even a difficult choice. Look at Weimar Germany. In 1922, France and Belgium occupied the Ruhr industrial region over unpaid war reparations. The German government chose to pay striking workers by printing marks. The money supply exploded. January 1922, the exchange rate was 180 marks to $1. By December, 7,750 marks. The government knew, economists warned. The printing continued anyway because stopping meant immediate political death. Stage 2 isn't an accident. It's a rational choice given the incentives. But it's also a one-way door. Once the backing breaks, once the debasement starts, there's no going back. The temptation is too great. The political cost of austerity is too high. So the printing continues until it can't. Which brings us to stage 3, loss of control. And this is where we are right now. This is the stage China is navigating with ice-cold calculation. At some point, the biggest and smartest holders of your currency figure out what's happening. They see the debasement. They see the math. But here's the thing. They don't announce it. They don't crash your bond market overnight. That would destroy the value of their own holdings. Instead, they diversify quietly. They reduce exposure. They rotate into assets that don't depend on anyone keeping promises. Gold, silver, strategic commodities, other currencies outside your system. And they do it slowly enough not to cause panic, but steadily enough that anyone watching the numbers knows exactly what's happening. China held 1,316 trillion in US treasuries in November 2013. Today, 688.7 billion, that's a 47.7% drop over 12 years. In 2022 alone, China dumped 173.2 billion, another 50.8 billion in 2023, another 57.3 billion in 2024. 9 out of 12 months in 2024 showed reductions. This isn't portfolio management. This is an exit strategy. And what are they buying instead? Gold. The People's Bank of China added gold for 11 straight months through September 2025. Official reserves now stand at 2,303 tons. But analysts tracking gold flows through London and Shanghai think China's real stockpile could be over 5,000 tons. More than double what they're officially reporting. That would put them ahead of every country except the United States. China's also dominating the silver market. They're the world's largest consumer. A huge chunk of that comes from their solar panel manufacturing. They control the majority of global solar production, and every single panel needs silver for connectivity. Silver's gone absolutely parabolic. It's jumped over 120% in 2025 alone. Right now, it's trading around $67 per ounce. That's an all-time record. The global silver market ran a deficit of over 200 million ounces in 2024, and analysts expect the deficit to continue through 2026. Supply can't keep up with demand. China isn't speculating. They're accumulating the physical metals that have preserved wealth through every collapse in history. This is stage 3. The smart money exits quietly. The reserve currency nation keeps borrowing and printing, thinking everything's fine because their bond auction's still clear. What they're missing is who's buying has changed. It's domestic buyers now, pension funds, banks forced by regulation to hold government debt. They're trapped. But the foreign central banks, the ones converting real production into your paper, They're backing away. Not because they want to destroy you, but because they're not going to be the last one holding the bag. And that leads to stage 4, the breaking point. This is where the mathematics crush the politics. Interest payments eat up so much of your budget that funding the government requires issuing more debt, which requires higher interest rates to attract buyers, which means higher interest payments, which requires even more debt. It's a spiral. The currency loses its function as a store of value. Inflation accelerates. Real interest rates go negative. Foreign governments and corporations flee to assets that don't depend on promises. Trade partners start settling in alternative currencies, or just straight barter. And the reserve currency, once the foundation of global commerce, becomes what it always was underneath the confidence: a liability of a government that can't honor its obligations. This happened to Weimar Germany. November 1923, $1 bought 4.2 trillion marks. The currency went from trusted money to toilet paper in under 2 years. The social consequences were catastrophic. Savings evaporated overnight. The middle class was wiped out. Hunger riots swept the cities, and from that chaos came political extremism that reshaped the entire world. This happened to the British pound. In 1914, before World War I, the pound sterling was the world's reserve currency backed by gold and the British Empire. The cost of 2 world wars, the end of empire, and the refusal to accept a smaller role led to the pound crisis of 1967, forced devaluation. By 1976, the United Kingdom had to go begging to the International Monetary Fund for a bailout. The pound today holds less than 5% of global reserves. Its reign as king is a history lesson. And this happened to the dollar's gold backing. August 15, 1971. President Richard Nixon closed the gold window. Foreign governments could no longer trade dollars for gold because the United States didn't have enough gold. The Vietnam War, the Great Society, the Cold War, all funded by printing far more dollars than there was gold to back them. In May 1971, West Germany abandoned Bretton Woods, refusing to take more dollars. In August, France sent a warship to New York to collect its gold. On August 11th, Britain requested $3 billion in gold from Fort Knox. The run was on. Nixon had no choice. The backing was gone. The dollar became pure fiat currency, backed by nothing except the government's promise to keep accepting it for taxes. Gold was $35 an ounce when the window closed. Today, over $3,000. That's a 98% loss in purchasing power against the one asset that doesn't depend on anyone's promise. Now let me show you how this pattern maps onto today step by step. And you tell me if this doesn't feel familiar. Stage 1. The dollar became the global reserve currency in 1944 under Bretton Woods, backed by gold, backed by being the only major economy not destroyed by World War II. The foundation was real. The confidence was earned. The world rebuilt itself around the dollar because the dollar was gold. Check. Stage 2. The United States abandoned the gold standard in 1971. Since then, federal debt has exploded from $398 billion to $36 trillion today. The debt-to-GDP ratio has gone from 33% to 123%. The Federal Reserve expanded its balance sheet from under $1 trillion in 2008 to over $7 trillion at its peak. Real wages have been flat for 50 years, while asset prices inflated massively, creating the widest wealth gap since the robber baron era. The debasement is complete. The currency is backed by nothing but the promise to print more of it. Check. Stage 3. Foreign central banks are diversifying. China's cut U.S. Treasury holdings by nearly half since 2013. Even Japan, the biggest foreign holder, dumped $27.3 billion in Treasury holdings in December 2024 alone. Central banks around the world added over 1,000 tons of gold for 3 years straight through 2024, led by China, Turkey, India, Poland. These aren't trades. These are strategic moves by governments that understand the math. The smart money is getting out slowly, methodically, undeniably. Check. Stage 4. Not yet, but the pieces are moving into place. Interest on the national debt topped $1 trillion in 2024, more than defense spending. The Congressional Budget Office projects interest will hit $1.7 trillion annually by 2034 under current policy. That'll eat over 20% of all federal revenue. To finance this, the Treasury has to issue more debt. To sell that debt without the Fed just printing money directly, yields have to rise. Higher yields mean higher interest costs. Higher interest costs mean more debt. This is the spiral. It hasn't reached terminal velocity yet. But the trajectory is set. Every simulation, every debt model, every honest analysis arrives at the same conclusion. The current path cannot be sustained. The math doesn't work. And math doesn't care about politics. Now, here's what the optimists will tell you. America is different. The dollar's network effects are too strong. There's no alternative. The world needs dollar liquidity to trade, so demand is permanent. They'll talk about American exceptionalism, technological superiority, military dominance, the depth of our capital markets. They'll say, this time is different. You know what? They said the exact same thing about the British pound in 1945, about the gold-backed dollar in 1970, about Weimar Marx in 1921. This time is not different. This time is the pattern. The mechanics are identical. The only question is speed and severity. And here's what makes China's move so brilliantly simple. They're not predicting the collapse. They're preparing for the pattern to complete itself. If they're wrong, if somehow the dollar defies the math and stays the permanent global reserve currency forever, they'll hold gold and silver that preserve purchasing power anyway. If they're right, if the pattern finishes like it always has, they'll hold the assets that become the foundation of the next system, while everyone else holds paper claims on a broke debtor. This isn't a gamble. This is risk management at the highest level. This is what you do when you understand that currencies come and go, but gold and silver are forever. So what does this mean for you? It means understand the machine you're living inside. Understand that reserve currencies don't last forever, that monetary systems don't evolve through committee meetings. They evolve through collapse, that this pattern is older than any government alive today and more reliable than any economic model. Ask yourself the most important question. If the largest, most sophisticated players on Earth are quietly moving reserves from dollars to gold, from paper to metal, from financial promises to physical assets, why aren't you paying attention? The central banks see the same data you see. They read the same economists. They have the same models, the same projections, the same debt forecasts, and they're acting, not with panic, not with press releases, but with the steady, calculated moves of institutions that know what's coming. China isn't attacking the dollar. China is reading the pattern. And the pattern says stage 4 is inevitable. Not today, maybe not next month, but with the absolute certainty of a debt spiral that can't be stopped without pain, no democracy will vote for. When it happens, the speed will shock you. The Weimar market collapsed in less than 2 years. The British pound lost reserve status in a decade. The gold window shut in an afternoon. The shift from stage 3 to stage 4 isn't gradual. It's a threshold. And once you cross it, the old system doesn't reform. It dies, and something new takes its place. Here's what you need to understand. This pattern doesn't care about your politics. It doesn't care about your optimism. It doesn't care if you believe in America or not. The pattern is mathematical, and mathematics doesn't negotiate. The question isn't whether this will happen. History has already answered that. The question is whether you'll see it coming, or whether you'll be caught holding paper when the music stops. China's making its bet. Hundreds of billions rotated from treasury bonds into the oldest money humanity has ever known. Gold that's been valuable for 5,000 years. silver that's been monetary metal since before recorded history. They're not doing this on a hunch. They're doing this because the pattern has never failed. Not once, not ever. And they've studied every iteration going back centuries.